Hello everyone. In accounting for share capital, we normally come across this word often like authorized capital, subscribed capital, called up capital, paid up capital, etc. So in this video, we'll try to understand what are these terms actually mean. Authorized capital or the registered capital or the nominal capital is the maximum amount of capital a company can collect. Or in other words, it is the capital that is mentioned in the capital clause of the memorandum of association. This authorized or nominal capital can be further classified into two parts, issued or unissued. Issued capital is that part of authorized capital which is issued to the public for subscription. Then comes the issued capital is further divided into subscribed and unsubscribed. Subscribed capital is that part of issued capital which is actually issued to the public for subscription. Unsubscribed capital is the one which is not issued. And again, the subscribed is further divided into two parts. One is a called up capital, another is an uncalled capital. Called up capital is that part of the subscribed capital which has been called by the company or demanded by the company to pay to the company. If it is not a demanded some portion of the share capital, that portion is known as uncalled up capital. In the called up capital, again, it is further divided into two parts. One is a paid up capital and call scenarios. Paid up capital is basically um, a part of called capital where actually paid by the shareholder to the company. Just to explain it again with the help of a numerical example, let's say there is a company which has registered 1 lakh equity shares of 10 each. On such a cases, 10 lakh is the authorized capital. Just because they have registered 10 lakh capital, they may not issue the entire 10 lakh. As and when it is required, they issue. Initially, let's say they've issued 60,000 equity shares of 10 each. So in this scenario, 6 lakh is issued capital, 4 lakh is unissued capital. Just because these people have issued 60,000 shares, it doesn't mean that public will subscribe to all the 60,000 shares. Let's say the people have subscribed to 59,000 shares. So 5,90,000 is the subscribed capital, 10,000 is the unsubscribed capital. So 5 lakh out of the 5,90,000 share capital, company normally collects the money at three stages: application, allotment, and the call stage. Let's say they have called only application and allotment money, which is, let's say, 7 rupees. So 59,000 into 7 rupees, that will going to be the called up capital. The remaining 59,000 into 3 rupees is called uncalled capital. Out of this 59,000 shares into 7 rupees, let's say 58,000 shareholders have paid fully. 1,000 shareholder, that portion is known as a paid up capital. 1,000 shareholders fail to pay the allotment money, that portion is known as a call scenarios. So this is how we can understand all these